Today, I want to cover the process step by step on how you are going to buy your first home, because there's a lot of unanswered questions and how the process actually works. So I'm going to map it out in 8 different steps, and then at the end of this video, I'm going to go through some frequently asked questions that often come up from a lot of my first home buyer clients. The property timeline for first home buyers. Like I said, we're going to be covering the process of buying your first home and what you should be doing at every single step. We're going to take you from these sad little faces here to getting the keys in your hands and being happy with the process and understanding everything from start to finish. I get all kinds of questions, and I wanted to make this step-by-step guide just for you to get into the property market. So, step 1, it always starts with the idea. You're sick of either renting or finally want to fly the family nest. Either way, you've decided your first home is the next step. So, the first thing you need to do is start auditing your financial position. You can't rely on anybody else to do this for you. This is where you need to understand your finances. So, how much do you have in savings? What does your employment look like? And do you have any short-term debts? I am talking about buy now, pay later, so that's Afterpay, Zip Pay, things like that. Personal loans, car loans, and credit cards. If I had $1 for every time someone said, hey, but my credit card, I don't even use it, surely we can just ignore it, I would be a very rich man. Credit cards, because you have access to that $5,000, $10,000 or $15,000 limit, whatever it might be, the bank assumes you can use it at any given time. And the truth is, you can. So they need to include it in your serviceability and assume you've used the entire limit. So after you've audited your own financial position, step number two is speaking to a mortgage broker. Now, they're not just people that file paperwork for you to get your loan. Well, some of them are, but not all of them are, especially myself. We want to take you through a step-by-step process to be able to get into your first home, making sure you understand all of the incentives that are available to you. So the government incentives on the table are things like the First Home Super Saver Scheme, the First Home Guarantee, stamp duty concessions, and the First Homeowners Grants, which, contrary to popular belief, are only available for people that are building new. They're going to map out a few things for you. We're going to look at your deposit options, the government grants that are available, whether you're paying lender's mortgage insurance or not paying lender's mortgage insurance. Do you have a lender's mortgage insurance waiver? These are all things that we will talk about. And then we're going to look at your timeline expectations. So how fast can we go from this meeting to your first home? Is it in a couple of weeks? Is it a couple of months? We're going to decide what position you're in and what your goals are, so then we can get you to where you want to be efficiently. So once your financial picture is mapped out, you can begin setting your strategy in line. This is the most important thing. It's locking in your maximum price. Not locking in this maximum price can be one of the worst things you can do. As you see here, this is a very emotional process. You need to lock in some variables, and price is the first major one. The decision you're making is inherently emotional, and you need to make a very financial decision while you have those emotions running hot. This means you need to set some boundaries in your mind and in your budget. That way you don't make a decision you regret down the track. Next is really important that not a lot of people actually go through, right? You need to understand the market. We all know price guides on homes that are for sale, especially here in Victoria, are usually a bit inaccurate. Well, very inaccurate at times. We know agents work for the seller. Very rarely, if ever, will they be working in our favor, which is the buyer. So you need to look at what do homes sell for, not what they're listed for sale at. They're two different things altogether. So this is the first thing I want you to do. Head to realestate.com and filter for sold listings in the areas you want to look at. Then I want you to set your location, price, and preferences. This is your beds, bathrooms, car accommodation, and land size, and only look at results within the last 3 months. This will give you the best idea of what's selling in your price range, because at the end of the day, like I've said, that's the only thing that matters. So once you understand what things are selling for inside of your budget and inside of the areas you want to buy in, now it's time to start house hunting. So once you've done all that, we're looking at step 4, which is starting to house hunt. Now you know what your price can get you. It's time to add in the filters that you require. So again, price, location, beds, baths, car parks, land size. Land size, I think you can sort of, not really include unless it's a massive sticking point, but that's up to you. It's the house that you're buying. But you need to make it your job that on a Saturday, you're looking at property if you can. Commit to viewing at least 5 properties before you decide to make an offer. At least 5. Do yourself a favor. I can almost guarantee the first one you make an offer on isn't the one you're going to buy. Also, the first one you look at is definitely not going to be the first property that you buy. It is just so unheard of. Commit to looking at least 5 different listings and compare the different properties. Understand floor plans, understand where the bathrooms are situated, understand what you get in these properties, where they're located in the suburb as well. All of these things are super important before you go ahead to make an offer. Also, I want you to talk to the agent and I want you to ask, why is the vendor selling? How long has it been on the market if you don't already know that already? And are there any known issues with the property? If a property has known issues and the agent knows about them, they are obliged to tell you about them. So it's a really good direct question to be able to ask them. But there is one question that is the most important in my opinion. When you're getting to the business end and looking at making an offer on a property, you need to know what your competition is. So I want you to ask, has anyone done a building and pest inspection? Why is this important? This shows intent. Anybody can ask for a contract. In fact, it's kind of a reflex. When you walk out and the agent says to you, did you like the property? And you're like, oh yeah, no, that's fine. You don't want to offend poor little Jimmy. So you say, just send me the contract, please, or the section 32. I'd love to have it looked at. That's free, okay? It gets you out of an awkward conversation. But someone actually going ahead and ordering a building and pest inspection, that is not free. People are paying for that service. So if you're serious about a property, that's what you're sending there. So you can understand what your competition actually is. Also, you need to consider the method of sale. Is it auction? Is it private sale? If it's private sale, you've got a little bit more flexibility in the way that you make your offer. If it's an auction, understand what auction conditions are. It's an unconditional offer if you win the property. In different states, there are different timings before and after an auction that will make the contract also unconditional because the property is in auction conditions. So really be mindful, make sure you're chatting to your conveyancer about that as well. Now we are moving on to step number 5. This is making an offer and this is how it goes down. You ask for the section 32 or contract of sale and you have it reviewed by a conveyancer. I cannot stress how important it is to have this contract reviewed before you sign anything. Do not sign anything without it being read by a conveyancer. Next, I want you to book your building and pest inspections or make your offer subject to that report. If the offer is sort of pressing and the agent's saying, well, we've got a few people interested, you can put it in with a subject to building and pest inspection. That's okay as well. I would also encourage you to include a finance clause. This protects you in case the lender rejects the property. If you have the opportunity to add in a finance clause, even if you're pre-approved, it just protects yourself, okay? You'll be first asked to submit your offer via email first. The agent will then prepare the contract for you to sign and then that's what they will present to the vendor. So it's not accepted if you've just signed something, it needs to be countersigned. That's what gets it. No offer is official until you have signed your part of the contract for it to be presented to the seller. Now we're looking at step number 6. Your offer has been accepted. You've received the countersigned contract from the seller and now we want to get your finance approved. First, we need to submit that contract to the bank. We also order some valuations as well for the property from that particular bank. We then review the property with the bank. They'll ensure everything meets your lending criteria and then they will hit the rubber stamp and approve your home loan. But what happens when you are approved? They'll confirm the following details: your final loan amount, your funds to complete, and your mortgage product. The funds to complete can be made up of the cash you are putting towards the property. So any cash you're putting towards the transaction is counted as funds to complete. It's a very common question when I have one of my first home buyers say, well, they're asking for a 5% deposit, but I know in our scenarios, they're also saying that we need to put down $30,000 to be able to, buy the property. The 5% deposit you're putting down, that is included in your funds to complete or the funds that we're saying you're going to need leading into settlement time or leading into purchasing the property. So it's important to confirm with your mortgage broker at all times how much money you are needing to actually take out of your pocket and make sure there are buffers built in place for things like the building and pest inspection, the conveyancer fees, and any adjustments at settlement as well. These are things that can catch a lot of people out. You want to budget at least $3,000 to $5,000 over what you think you might need to settle on the property. Now we're moving into step number 7 when we are preparing for settlement. It's time to get you ready. Your broker has the loan approved, now your conveyancer takes the wheel, but you also have a few jobs as well. You need to make sure your loan documents are signed. You go through those with your mortgage broker. Transfer any shortfall funds into the right account. Usually that's going to be the new offset account that's getting set up alongside of your home loan product. You need to make sure that your building insurance is in place as well. And if there's any requirements for the listed party on your building insurance too, speak to your broker about that. Confirm your settlement date and your pre-settlement inspection. Okay, I'm not going to go over what to do in your pre-settlement inspection. I'll make that in another video, but these are sort of the steps on what happens. Now, if you're moving into the property as well, line up your mates or a removalist to help you with the move on settlement day. And here we are, step number 8, settlement day. Your conveyancer finalizes everything with everyone involved. That's the agent, that's the seller, that's your bank, that's the seller's bank. Your conveyancer sort of takes the wheel on the big PEXA round table, I like to call it. And then this is a big one as well. Typically, your repayments will start 1 month from settlement day. So you don't need to pay the next day. Then you go ahead, you pick up your keys from the agent and you are officially a homeowner. Congratulations. Now let's move into some frequently asked questions. Do you need a 20% deposit to buy? Short answer is no. The absolute minimum your deposit you can get in with is in fact $0. If you're using a parental guarantee loan, you don't even need a deposit. You just need the income to be able to get your home loan. That's really all you need. However, typically we're looking at a 5% plus cost deposit because not everyone has a parental guarantee available. So do I still qualify if I have a HEX or help debt? Yes, you do. There's a lot of changes coming into the moment with a lot of the banks. So make sure you chat to your broker about policies about your HEX and help debts. Will the bank accept a gift from my parents? Yes. Make sure again you chat to your broker because every bank is different. Some of them want genuine savings from you if you're at a certain loan to value ratio. Others don't really care. So you just need to sort of map out exactly your position. And this is where your broker will find the right loan product that's going to suit your situation. What are the hidden costs I'm not budgeting for? Generally, it's things like your conveyancer fees. You don't usually budget for that in the whole sort of transaction because you get swept up in everything else. Things like your land titles office fees that aren't sort of specifically told to you, but you need to make sure that you are aware of them. And any fees and adjustments at settlement. This is like water rates, council rates, adjusted body corporate fees that the seller's already paid in advance. These are things that get told to you 2 to 3 days before settlement, which is why I say always budget $3,000 to $5,000 above what you were originally told for your home loan settlement. How do I know if I'm eligible for the first home guarantee or any stamp duty concessions? This is a conversation to have with your mortgage broker. It really depends on your personal position and what the rules are at that given moment. And also, this is one that I added recently is when does the interest start accruing? I've actually had a question multiple times when the loan gets formally approved and we've signed loan documents and the offset accounts are opened up prior to settlement. I've had a few people actually ask me, well, does the interest start accruing now before settlement? Like, do I need money in my offset account so I can start offsetting that? No, nothing happens until settlement day. Once you settle, that's when everything starts to accrue and everything is in motion. So between the time you're formally approved and the time to settlement, you don't need to worry about any costs for the bank. You just need to worry about having the right amount of money to settle your home loan. If you have found this video helpful, please subscribe to the channel. Ask me any questions that you might want. I love making videos like this and let me know what you think of the new format as well.